Saving money on monthly bills is not about turning off every light, canceling everything enjoyable, or constantly feeling restricted in your own home, but about understanding how recurring expenses quietly expand over time, how convenience and habit inflate costs without being noticed, and how small structural adjustments can reduce fixed expenses permanently without lowering comfort, quality, or dignity. Number 10. Audit recurring charges that no longer match your life. Many monthly bills continue long after their original purpose has faded simply because subscriptions and automatic payments are designed to operate quietly in the background without demanding attention. Over time, services that once felt essential become rarely used, yet they continue extracting money because canceling requires a deliberate interruption of routine. Beginners often underestimate how much financial leakage occurs through small recurring charges that feel insignificant individually but substantial collectively. Reviewing bank statements line by line creates visibility where there was previously assumption. This process often reveals overlapping services, forgotten trials that converted into paid plans, or upgrades that were never intentionally chosen. Eliminating or downgrading these services does not reduce lifestyle quality when they are no longer actively contributing value. When recurring charges align with actual usage rather than past intentions, monthly bills decrease naturally without sacrifice. Number 9. Negotiate fixed bills instead of accepting them as permanent. Many people treat recurring bills such as internet, insurance, mobile plans, and subscription services as fixed and non-negotiable simply because they arrive on a schedule and are paid automatically. Over time, this automatic payment structure creates the illusion that prices are firm, when in reality, many providers build pricing flexibility into their models. Companies often depend on customer inaction, knowing that a large percentage of people will never question rate increases or explore available discounts. Promotional pricing frequently expires quietly and shifts into higher standard rates without clear reminders. A brief phone call or online chat asking about loyalty discounts, competitor matching, or retention offers can lead to immediate monthly reductions without changing service quality. In many cases, simply expressing that you are considering canceling triggers access to lower-tier pricing options that were never advertised. The discomfort of negotiating lasts only a few minutes, but the savings repeat every single month afterward. When fixed bills are reviewed annually, rather than ignored indefinitely, costs remain aligned with current market rates instead of drifting upward. Reducing a fixed expense creates permanent breathing room in the budget without altering daily comfort. Number 8. Adjust usage patterns instead of cutting services entirely. Completely eliminating services often feels extreme and unnecessary, especially when they contribute meaningfully to daily life, productivity, or relaxation. However, small behavioral adjustments in how services are used can significantly reduce monthly costs without removing access. Energy consumption, water usage, and even mobile data patterns often reflect habit rather than necessity. Lowering thermostat settings slightly in winter or increasing them modestly in summer rarely affects comfort when changes are gradual and consistent. Shifting heavy appliance use to off-peak hours in regions with time-based billing structures can quietly reduce utility expenses. Being mindful of streaming quality settings, auto-renew add-ons, or unused premium features prevents silent overpayment. These changes focus on efficiency rather than restriction, preserving lifestyle while reducing waste. Over time, improved usage habits lower recurring bills in a way that feels invisible rather than sacrificial. Efficiency reduces costs while keeping quality intact. Number 7. Replace recurring convenience costs with simple system upgrades. Convenience often feels inexpensive in isolation, but when fees repeat monthly, they quietly inflate fixed expenses without noticeable benefit. Delivery subscriptions, premium service tiers, rush processing fees, and add-on features are designed to remove small inconveniences at a recurring cost. While each fee may appear minor, their accumulation across categories can meaningfully increase monthly obligations. Instead of removing convenience entirely, small structural upgrades can reduce dependence on recurring fees. Planning meals in advance, organizing schedules, or consolidating errands decreases reliance on costly last-minute solutions. Setting reminders prevents late fees and penalty charges that arise from disorganization rather than necessity. Investing once in better tools, organization, or planning systems often replaces ongoing convenience costs. These adjustments preserve comfort while lowering baseline expenses. When systems improve, recurring fees shrink naturally without reducing quality of life. Number 6, review insurance and protection plans with intentional clarity. Insurance premiums often rise gradually at renewal without drawing attention, making it easy to overpay for coverage that no longer reflects your current situation. Life changes such as relocation, vehicle upgrades, debt reduction, or improved credit scores can make older policy structures outdated. Many people maintain coverage levels that were once appropriate but are now excessive relative to actual risk. Reviewing deductibles, bundling policies, or requesting updated quotes introduces transparency into an area typically driven by habit. The goal is not to reduce protection recklessly, but to align cost with realistic exposure. Paying for redundant coverage or unnecessary add-ons increases monthly bills without increasing safety. Comparing competitors periodically ensures rates remain competitive rather than drifting upward automatically. When protection is matched thoughtfully to present needs, financial security improves while unnecessary cost decreases. Intentional coverage reduces anxiety and prevents overpayment driven by fear. Number 5. Eliminate duplication across services and memberships. Many households unknowingly pay for overlapping services that provide similar functions, especially in entertainment, cloud storage, or digital tools. Subscriptions accumulate gradually, often added during promotions or free trials that convert automatically. When services are not reviewed collectively, duplication becomes normalized and difficult to notice. Consolidating streaming platforms, choosing one primary storage provider, or eliminating redundant apps reduces monthly costs without reducing actual utility. In families or shared living situations, coordinating accounts prevents multiple payments for identical services. Duplication drains money not because it is large, but because it is repeated. Reviewing all subscriptions in one place exposes patterns that are invisible when bills are scattered. Removing redundancy preserves access while reducing excess. Clarity transforms scattered payments into intentional spending. Number 4. Resist automatic lifestyle upgrades that inflate fixed expenses. As income increases, monthly bills often expand quietly through upgraded plans, premium features, or larger service packages that feel justified in the moment. These upgrades are rarely questioned because they align with the idea of progress or reward. However, many premium tiers provide marginal improvements relative to their higher recurring costs. Once upgraded, these plans become the new baseline and are rarely reconsidered. Reviewing whether higher tier services are fully utilized prevents paying for unused capacity. Downgrading to a level that meets actual usage does not reduce lifestyle quality when expectations remain realistic. Resisting automatic upgrades protects long-term financial flexibility. Maintaining modest baseline expenses creates room for savings and investments instead of permanent inflation. Intentional restraint stabilizes monthly costs even as income grows. Number 3. Reduce inefficiencies that quietly increase monthly expenses. Small inefficiencies in energy use, maintenance, and daily habits compound into meaningful costs over time. Devices left on standby, minor plumbing leaks, inefficient lighting, and neglected maintenance tasks gradually raise utility bills. These inefficiencies rarely feel urgent, which is why they persist. Addressing them does not require sacrifice, only awareness and small corrective actions. Replacing outdated bulbs with energy-efficient options, sealing drafty windows, or servicing appliances improves performance while lowering consumption. Maintenance prevents small problems from becoming expensive long-term drains. Efficiency upgrades often pay for themselves over time through reduced recurring costs. The goal is not austerity, but smarter resource use. Reducing inefficiency lowers bills while preserving comfort and performance. Number 2. Set structured limits for variable expenses before they drift upward. Variable bills such as groceries, utilities, and discretionary services often increase gradually because they lack clear boundaries. Without predefined limits, spending expands subtly through small additions rather than dramatic changes. Creating structured ceilings introduces awareness before overspending becomes habitual. These limits are not strict punishments, but reference points that encourage mindfulness. When spending approaches the ceiling, small adjustments can be made calmly instead of reactively. This prevents sudden financial surprises at the end of the month. Structured limits encourage intentional consumption rather than automatic spending. Over time, awareness stabilizes fluctuating expenses. Stability reduces stress and supports consistent saving. Number 1. Lower the baseline cost of living instead of chasing temporary cuts. Temporary reductions often rely on short bursts of discipline that are difficult to sustain in real life. When cost-cutting feels extreme or restrictive, fatigue eventually reverses progress. Permanent structural reductions, such as renegotiated contracts, eliminated unused services, or optimized plan selections, reduce monthly bills automatically. Lowering the baseline cost of living creates savings without requiring repeated effort. When fixed expenses decrease, financial flexibility increases immediately. Savings become easier because less money is required to maintain daily life. Structural change produces lasting impact with minimal maintenance. Long-term stability grows from permanent adjustments rather than temporary intensity. Reducing the baseline transforms finances without sacrificing comfort. Bonus tip: review trends over time to prevent silent cost creep. Looking at 1 month in isolation rarely reveals meaningful patterns. Tracking bills across several months exposes gradual increases that might otherwise go unnoticed. Service providers often raise rates incrementally, relying on small adjustments that avoid triggering cancellation. Reviewing trends helps identify these increases early. Trend analysis also highlights areas where improvements have already been made, reinforcing positive behavior. Seeing a steady decline in certain bills builds confidence and motivation to continue optimizing. Without trend review, small increases accumulate quietly into large annual differences. Awareness of long-term patterns protects against financial drift. Consistent review ensures that progress is maintained rather than assumed. If you want to cut your monthly bills without sacrificing your lifestyle, choose one area from this video and review it carefully this week, instead of trying to change everything at once. Comment which bill you plan to optimize first, subscribe for realistic and pressure-free financial guidance, and thank you for watching. See you next time.